Hi, this is Randy Finney with the right side of the chart, and this is a market update for Wednesday, October 31st, 2018. Let's take a quick look at the markets and see how far this bounce may go. Members of the site on Monday, I had posted that it was time to start covering short, reducing short exposure, that the market looked like a bounce was likely as early as next day, tomorrow. That was yesterday. So that's where the bounce started and continues to play out. There was a lot in the charts, the divergences, just everything else that was covered recently on the site. So the bounce again, hopefully didn't catch anybody by surprise, and it's profitable. I love trading these short covering rips, whether it's a bear market rally or whether the correction's over. And I don't think so. I think this is just a counter trend bounce. We were very oversold, divergences in place, and everything else mentioned. So let's just take a look at see where this may go. We're going to look at horizontal price resistance levels, targets, which I also shared on the site this morning. I posted before the market opened where the futures were at, ESNQ, S&P 500, NASDAQ 100 E-minis, showing you some bounce targets there, as well as SPY and QQQ. And I'll hit on those levels again today. What I didn't do this morning on the site was post Fibonacci retracement levels. So we'll look at a few different time frames and look at some areas. And before we do that, I'll give you my thoughts. Yeah, I think this rally, could carry into tomorrow. Who knows? It depends how. That's the thing about counter trend bounces. It's easier to gauge really where it's going to go in time. I'm sorry, in price versus more so in time. The sharper you bounce. Today's a sharp day up. We were up about 3% in QQQ a little earlier. It's given back a little bit as I started this video, but the faster and harder you bounce, the quicker you hit those bounce targets, and then the earlier the counter trend bounce is over. That's just the way I look at it. Does this have the potential to morph into more? Sure, anything does, but I highly doubt we're going to see new all-time highs now. Or take out the recent highs in the market. There's too many overhead resistance levels. Now, if those levels are taken out, I'm talking about those long-term trend lines that we broke on the weekly charts recently. If those are taken out, the 40-week moving average, 200-day moving average is regained, on both SPY and QQQ with a solid weekly close back above those levels. I don't care what happens intra-week. The one thing I will tell you is you need to expect volatility. Cuts both ways on the downside and upside. Volatility doesn't just mean down, markets down 3%. It means, like we're seeing today, this is volatility back and forth. So all right, so let's just jump into levels. Here's QQQ. This is a 15-minute chart. Really need to go out to 30-minute. I'll show you. So what we're looking at here are Fibonacci retracement levels, and the usual suspects, or the usual numbers, I should say, are anywhere from the 38.2 up to the 61.8 fib level. So I have the highs right here back from early October, and then this major reaction high, that was that big counter trend bounce we had back mid-month. And you can see there's a fib cluster comes in right about where we stopped so far today. There's a 38.2 fib of the move off from the highs to the recent lows, and the 61.8% fib from this reaction high here back around the 17th or so. So that is certainly a potential stopping point, and by all means, it did stop so far today. And we haven't had a massive pullback yet, but it stopped today's rally. You can see there's another fib, and the thing about these fibs I really like, and that's where I put more weighting into them when they line up with price. Support and resistance levels. You can see right there, there's a reaction high and a gap right there, top of a gap, as well as some reactions there. So that 174, that's a magic number. And I'll tell you, if we get there, I will quite likely be looking to add back the swing shorts. Yesterday, after posting that on Monday, I followed up yesterday and closed out our short trade ideas early, even though we had already hit the first price target just a day before on QQQ, SOXX, the semiconductor short. And what you really don't want to do if you're swing trading this market using the leveraged ETFs, especially three-time leveraged ETFs, and even more so in volatile sectors like the semis, you don't want to stay in ride out the counter trend bounces. Like I said, those ETFs can actually do better than 300% returns if you're in a very pretty unidirectional trend, like most of this correction, right? Unidirectional, and I'm talking about daily closes. Doesn't matter what happens intraday. It's these sharp moves down. This is just an intraday chart, but these were all daily, moves down where we had day after day red closes. That's when you want to be. You don't want to be on in those when you get a lot of green closes or closes against the trend, whether you're trading them long or short. um, that's where the decay kicks in, and that's where you underperform, do less than 3 times. So that's why we closed out SOXS, and plan to get back into it. Let's see. Let's go over a couple other levels here. Okay, and here's our golden, what I called the golden trend lines that capped all those advances on the way down. As expected, they were taken out today. We took it out on the SPY just barely yesterday, followed through today, and then QQQ. We just popped above it. But when you're up 3% in one day and you hit some resistance levels, that's what I call momentum fueled overshoot. So what we're going to do is come back, probably back test that. Plus we have that 169.77, pretty nice resistance level there as well. So we'll watch cues. We'll see if this holds here. Probably hold and get another reaction, another bounce. But here's my thoughts too. Let me just say this. This goes into my thinking. We all know what happened to Amazon. Amazon broke down long before they got the post earnings spanking the other day. They reported last week and they were already down quite a bit. And let's just look at Amazon. And I'm going to use this example for Apple. All right, Amazon. Now the correction in Amazon was well forecast. It was priced into the charts. We were tracking it in this rising wedge all the way back here. Amazon broke down well before the market even broke down, and because it is such a huge component, there was a breakdown of the wedge, danced on that 1875 support for a little, back tested, and then boom, that's all she wrote. Breakdown, back test. So you get two objective shorting entries when you short rising wedges. Either you short the breakdown, but I don't go, if you have support right below where the wedge breaks down, you want to hold off to the support level goes. Or your next objective level is on a back test. And so once it back tested and failed, then took out that support, continued down. Hit my first target, undershot the second target zone, but a lot of this was at post-earnings mess. Now, Amazon itself is in a precarious technical posture. It overshot my second target zone, but now it's back into there. Target zones are where I have two lines in close proximity. Support once broken becomes resistance. So now this level, 1650 or so, is resistance, and you can see the 200-day moving average just above that. So I think the upside in Amazon is limited. And my concern now on the market is Apple was the last holdout. It still is the last holdout of the FANG stocks, FAAMG. Those big leading components of QQQ, top components of the SPY. Apple's held up relatively well compared to those stocks. And just the other day, it broke down. It finally, it succumbed to the selling pressure in QQQ, dip below this trend line in that 215 to 216 support level, but so far snapped back up. And I always say this: never take a breakdown on a stock or a breakout that occurs right in front of earnings. They report this week. So the breakdown yesterday really didn't mean much because the fact they're going to report on Thursday, tomorrow after the close, and the stock's going to go one way or the other. Now, my take, where I'm going with this, is we know what happened to all the other FANG stocks during this, this most recent sell-off here. Microsoft had a pretty decent correction. Amazon had a heck of a correction. So did Alphabet. We're talking down big. These stocks are in bear market territory, down over 20%. And so Apple, like I said, and of course Facebook. Facebook's way off the highs. So Apple, my guess is technicals have been broken. There's been a lot of technical damage done this chart. And if nothing else, Amazon, after already being down as much as it was, still got hammered after earnings, and just it wasn't a horrible earnings report. Revenues or something, part of it had slowed. But here's the thing: how many people that are long, and we all know it's a matter of fact that hedge funds, mutual funds, individual investors, they're top heavy in Apple. This is the world's largest stock. It is one of the most widely held stocks, and it's overweighted in a lot of portfolios. And it's the largest component of the S&P 500 and QQQ. That alone makes it overweighted. So my theory, and it's just my thoughts, that we're going to start seeing some profit taking, not just profit taking, just unwinding, lightning. People don't have to completely dump their Apple, but Amazon has showed the market these stocks are not bulletproof as everybody thought they were for so long. Um, you know, so now that Amazon has showed, and all the other FANG stocks, I should say, have showed us that they are not bulletproof, that these stocks can come under, heavy selling pressure. And I think that's what we'll see. So this rally, where I'm going with it, I think if it's not sold into today, it'll probably at best I see it going up maybe a little more tomorrow into lunchtime, give or take. And by the afternoon, I think we'll see some profit taken in Apple that, at the very least, doesn't have to drag the market down. It could, but it will probably give us some headwinds near term as on this rally as we head into Apple's earnings report on Thursday night. And then, from there, anything can happen. I'm looking at this chart. I'm looking at the divergences. There are negative divergences, or there were divergences at the high. But it would look really well and fit well for a nice scenario here. And anything can happen. It's a fool's errand trying to guess what a company will do after it reports. But a nice pop up in Apple, come up here, extend these negative divergences, and then a big major reversal on Apple. And then go on down and hit my price targets to the downside. And that would just, like I said, simply extend these negative divergences. Again, we had divergence in place at this high, and you don't have to have divergences at a high in a stock. It just helps, and it does indicate that a trend reversal is coming. So there's Apple. That speaks also to the broad market, what I think may happen. And, this is, like I said, the last of the ones to break so far. And I'd be surprised based on the charts, the technical posture, looking at the weeklies and everything else. It's not a matter of if it will break, it's just a matter of when. Can Apple rally and keep the market up for a couple more weeks, couple more months into early next year? Anything's possible, but like I said, the intermediate to longer term outlook is increasingly bearish on Apple. Okay, well, I'm on the weekly charts. Let's just jump back and not forget the big picture. We have a breakdown in QQQ. Here's the weekly candle right now. We're still, we're making some headway. We're coming back, and here's the way you can look at this: glass half empty or glass half full. QQQ last week broke the primary uptrend line on a weekly closing basis, but it stayed above that key 40 week. And if nothing else, this 40 week works excellent, better than on SPY and most other things. It works excellent on tech stocks, particularly QQQ, which is heavy with tech stocks. And you can see that right now we're back testing it. So you can, if you have to help time your entries and exits with the short-term charts, but from a longer-term perspective, that's a back test of resistance, which is that 40-week moving average. However, we haven't given that up yet on a weekly closing basis. There is still we have until this Friday, and it's not much more. We're right on it right now, about 170. QQQ could snap back and continue to, print a weekly close above here. And therefore, there's this QQQ is still clinging to some long-term support. You know what I did there? That's a 6-day period chart. Here's my weekly. That's better. All right, here's a weekly chart, and there it is. There's that candle. So we're back testing from below. We did close below the 40-week last week. I was using a 6-day period chart. This is a weekly. So we closed below it, and support, once broken, becomes resistance. But we have one more day to finalize this weekly candlestick. I'm sorry, 2 more days. Today's only Wednesday. Wishful thinking. So we'll watch that. Daily chart. Some lot of overhead resistance levels here. 170 up to about 170.26 or so. You can see lots of reactions. I know I have a lot of trend lines on this chart, but you can see that was a key level, key support level, and a lot of reactions on it. Broke, and we're back testing now. If we get through there, then you have just above that, zoom in tight, there's the 200-day moving average just above it, really almost at today's highs. Like I just showed you on the weekly chart, it's the same as a 40-week moving average. So we kissed that today, and we have some trend lines, trend line resistance just above it. So there's a mountain of overhead resistance levels, and it is very possible this bounce ended right as I was starting this video. We just started to reverse in QQQ. If not, The markets have a lot of resistance overhead, and because a lot of the long-term charts have been broken now, I think there's going to be a lot of sellers waiting on the sidelines that got trapped in that first leg down, praying on their knees and hoping they could just get a bounce to get out. That's what I think will happen. So I'd be careful chasing this thing long. I came into today long and just reversed right before the video because we're hitting all these levels, but yeah, I wouldn't stay too late to the party. Just like I said, it's not a good thing to stay too late to the party being short. And those that didn't heed that advice got smoked today and yesterday. But the same thing happens on a bear market or counter trend bounce. They're sharp and fast. If you're going to trade them long, get in, get out. Don't try to milk every penny. If you can do it, great, but don't stay too late to the party. And so there it is. So what I wanted to do today is just show you different levels where this bounce may be contained. So there's the 60-minute, the downtrend line on the 60-minute chart. I just showed it to you here on the 15-minute chart. So now we're back testing, and maybe that back test holds. That is, was a key level. We overshot it a little bit. May probably hold here somewhere, or maybe come back down. But anything's possible. I showed you. Maybe the sellers are waiting in force, and they're going to start unloading here. So you just have to be careful. Okay, sorry, I lost my train of thought. I was watching on another screen futures. Like I said, I reversed the trade. I had a long trade. I reversed it. And I wanted to cover. What I did is just put a trailing stop loss. I'll let it run. We're back testing, so if we bounce, and I put a very tight stop, not a trailing stop, a hard stop. So if we continue to melt down, come back down a little bit more, quite a ways. It was a big gap to backfill, great. But if not, we bounce, and I'll just go flat for a while and look to get back in after I finish this video. So let's see here. All right, 60-minute chart I already showed you, and I wanted to show you the NQE minis. These are the NASDAQ 100 futures. There's the golden downtrend lines are taken out today. You can see an impulsive move once that was taken out. And we hit, these are fib levels up here. I have there's a 38.2. I did two fibs. I did it from the highs, the recent highs up here, and this reaction high. So we call this a fib cluster when you can do two or more, Fibonacci retracements off key reactions. Again, that's so from the highs here down to the lows, and then this reaction high down to the lows. You come in, so we stopped cold at that 38.2 fib so far today. Just above that, I have both a price resistance at 70, roughly 70.61, as well as a 61.8 fib that comes almost perfectly with that level. And then up here, this would be a very nice, and right now let's just call it my max upside bounce target, around 71.70, give or take. There's a Fibonacci cluster there as well as price resistance. So again, that might look something like this. This market wants to pull back here a little bit, which it already has. I don't know if it can come back all the way to test this trend line. Anything's possible, but so at most maybe another thrust up there. And now where this comes into play is, again, if you're an active trader and you want to gain these, great. But for swing trading, it's all about risk reward. If you didn't go long here recently, do you want to chase it right now? How much upside is there? Now, I may be wrong. We can certainly go a lot higher. You can see I have major resistance up here. That's where the markets broke down. That is a major resistance area. If we got there, I'll tell you right now, unless the charts told me otherwise, I'd be shorting with both fists. But so that's a uppermost bounce target. I don't think we're going to go that far. It's possible, and if we take that out, great for the bulls. But as of now, this is about my uppermost bounce target, whereas somewhere from where we hit today up to about that 70, 60-ish level, that would be my minimum bounce target. So we've pretty much met the minimum bounce expectation, and the upside is somewhat limited from here, relatively speaking, of course. Okay, and real quick, the ES 60-minute chart. There goes that stop, just got hit, so at least I'm flat on that and got gained a little pullback. All right, ES 60-minute chart, there's some price resistance here as well as a 50% Fibonacci cluster. I did the same thing, by the way, on this. I took the move off the highs here down to the lows and also added some fibs from this move down to the bottom. So you can see there's a 50% fib plus price resistance right around 27.21. You come in here, you have another cluster of a couple fibs just above that, and then price resistance around 27.51-ish, give or take, right there. You can see a lot of reactions on that level. there. And let's say my uppermost bounce target, you have some fibs plus price resistance here that runs up to about 27.83 on ES. And that would be my uppermost bounce target at this point in time. And as I say, the charts are dynamic, and so is my analysis. If anything changes, I'll let you know. But as of now, maybe it could look something like this if we get that high. But again, it's about risk reward. You know, how much upside is there? Do you want to game it? You may be on a pullback. We'll see. The charts are developing fast, but at this point in time, like I said, I'm at least active trading in my trading account just went flat, at least on that futures trade. But that's just more of a very active in and out kind of thing. Oh, and there's that major resistance area comparable to the one I showed you on QQQ and NQ. That's about 28.72, give or take. Very big level in ES. Okay, and for you SPY traders, there's the same as the golden downtrend line there, except this is a 60-minute chart. I was using that golden downtrend line on the 15-minute chart. So there's your bullish falling wedge, 60-minute divergences, everything again that I say I like to go long with for swing trades. So it's just, again, this one might be a very quick swing trade. But so far so good. We gapped above it today, just perfect display of technical analysis. And this is how volatile markets work. These gaps get you. What they do, if you were short, you got trapped today on that breakout, and it hasn't offered you really an objective time, a pullback, or any back test to get out. And if you weren't long, it didn't give you an objective entry. Sure, you could have bought the open today, and there was a little upside to go from there, but the bulk of the move happened, in the gap up today, and that's what I talk about trapping. The market tends to do that kind of thing, and it's also one reason, I like futures. Futures, you trade around the clock, you can set your stops overnight, but futures aren't for everyone, certainly not. But with these ETFs and individual stocks, during periods of high volatility, you can see all the gaps. You're going to have these big gaps, and they can either work for or against you. Okay, and here's the 15-minute chart of SPY with that, again, the golden trend line gapped above. I just showed it to you on the 60, same thing. But these, you can see some levels here, different levels to trade off of. 271.54. We overshot that briefly today, and again, I use the term momentum fueled overshoot. We had a lot of velocity upside momentum going in, so we overshot it and then fell back. So that's technically a failure in my book. Popped above it so fast, fell right back below it. So now that level needs to get taken out. But once you have a reaction high, that's actually now the more important level. We need to take out today's highs. If so, that could open the door up for a move up to 274.48, give or take, and that would be, I don't know if that aligned with what I showed you earlier, but just looking at this chart, that's probably my uppermost bounce target right there. And again, when I say uppermost, these are the minimum targets. That could be it. That may be the end of the pop. This may not be the top of the rally if we get there, but that's right now what I'm looking at. So if we fall back in here, you can see all the supports. 270 should act as support. This was a line from before, but maybe we want to come in and backfill this gap right here. Daily chart and SPY, one of the reasons, for looking for the bounce recently, we had this RSI divergence building. As I mentioned the other day, SPY fell down to almost very close to this 258.83 target I had level. Also, QQQ had hit my price target that day at the lows, as did a lot of other things. I mentioned that in one of the recent videos and on the site. So you had RSI divergence. You have the PPO turning up here. So again, this rally certainly has the potential to do more. The other thing I pointed out yesterday, early in the morning before the rally even got going, the markets were flat at the time, or flat-ish, almost flat, and every single sector in the SPY was up. XLK was flirting from going red to green, but all the other sectors were strong and healthy, and that was another, reason for, covering any shorts at that point that weren't covered yet. So SPY right now, you can see the RSI divergence again, the PPO curling up, and SPY is still comfortably below its 200-day moving average. And just looking at the daily chart now, I showed you a minute ago on the 15-minute chart, like a near-term bounce target or upper bounce target. But if things, if we get some traction to this rally, which is certainly a possibility, just looking at SPY, and again, you have to take SPY and QQQ together. So far, this has been a tech wreck. It's been an unwinding of that overcrowded FANG trade. That doesn't affect SPY as much. It does hold most of those components, the same top components of the Nasdaq 100, but they're not nearly as heavy weighted. So if SPY, you'll have defensive issues, REITs, utilities, consumer staples, things like that can rally, especially, and they have been recently. That shows institutions are now moving money over to defensive issues. So that would be an uppermost bounce target based on the daily chart, and call it right around 279.26, give or take. Anything much above that doesn't mesh really well with my scenario. It's possible, but that's where I think any bounce at the upside right now, max upside is likely to turn down somewhere, give or take that 279.25 level. And just revisiting that, you're not going to see SPY go up that much. So to revisit that QQQ chart, I had two alternative trend lines here. So that would actually mesh with a pop up there, and that's also that significant, very solid resistance zone I showed you a minute ago on the NQE minis and S and the ES. So there it is. So let's just say we'll just, disregard what I said earlier. As far as swing trading goes in the daily time frame, let's just say this would be my max upside target at this point in time. I'm not favoring a move up there, but anything much above that just really puts a big dent into the bearish case and will undo a lot of the negative technical developments that we've had, those key long-term trend line breaks, the moving averages, everything else. So I want to say that this could easily open the door for a move to new highs if that level, call it, I'll tell you what it is. It is 178. Yeah, the big 178 level. So that would be again max upside bounce target. Qs are only at 169.50 right now, so that'd be a pretty healthy move if we got there. About another for about another 5% or so from where we're at now. Okay, let's wrap it up here. This video's gone on long enough. So there's a lot of levels, and again, hard to say right now where we stop if this is just a counter trend bounce. But again, I look at the weekly charts. There's that SPY weekly still well above the 40-week and the bull market uptrend line off the 2009 lows. So, and that also meshes also with a bounce up to around that level if we want to come in and back test that trend line from above. So this would be, let's call it, my most bullish scenario, and it's still a very bearish longer term scenario, but that would have us bouncing for maybe even several weeks here. It would also mesh somewhat with that Apple going on to make a new high, a divergent high before reversing, and that would be a back test of the trend line. So it would be a very objective shorting op if and when we get there. But remember, a lot of damage has been done. There's probably a lot of wannabe sellers, trap longs lurking in the shadows here. So be on your toes. This counter trend bounce can reverse anywhere at any time. And if it does, we'll try to recognize that for what it is when it happens. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.